Hi everyone, welcome back to another trading day. I'm Johan Malan, and today, Thursday, 29 February 2024. My trade setup directions for today will be long on the euro, the pound and the yen, short the Aussie, the CAD and the New Zealand. But before we proceed, remember that trading carries risk and never trade with money that you cannot afford to lose. And at the end of this video, I'll show you my favorite trade idea for today. So let's get started and turn pips and points into profits. The dollar index, after running up, there's a little bit of dollar bearish news coming in in the US yesterday, and pushing it slightly down, but still bullish. It's a little one news event shadow there, and one news event doesn't change the bigger trend on the dollar. We need quite a few of them after each other to really change the direction. But market's still finding support here, having a little bit of rejection yesterday based on the news. But other than that, staying bullish on the dollar here. Now the dollar has gone from green zone, dropping back to the neutral zone. So I'm like a little bit neutral here. It is slightly on the bearish side. It's slightly on the bearish side on the very short term. Medium, long term, that's your very short term. So I call this medium term, long term, short term, and very short term. This is your intraday direction. This is my end of day directions, and this is the intraday direction. So on intraday, on the 4-hour chart, it starts to look a little bit more bearish than bullish. That's always the first thing that changes. But which one will win? Most likely the larger time frames, which is the daily. This becomes very strong, and meaning that it becomes very strong is that it's a strong level. Doesn't mean it will bounce. It just means if it bounces, it will be a strong bounce. If it breaks through, it will be a strong or a weak break, a strong break down the page. But it's becoming resistance, support, right at the moving average. The market's a coup de grace. It needs to make a decision on the dollar, and hopefully that'll happen soon. So with a little bit of weakness yesterday coming in on the dollar and on the short term, we see a little bit of a push on gold, pushing back to that resistance line. We've been testing this 1, 2, 3, 4, 5, 6, 7 days. Could be the 8th day. You can see here my short-term indicator starts to indicate bullishness. So slowly but surely the odds are turning into gold bullishness, meaning the odds should turn on the dollar from being bearish, which shows that the odds could turn, that it could break down. But for now, I still have to sit with that. Meaning a little bit of a weaker dollar, meaning I can start to look at stock market bullishness, but cautiously, very, very cautiously, due to this big support level. As long as this doesn't break through down, it's going to be stock market bearish or sidewaysness at least. So we're going to get caught in a sideways market, which we don't want to sit. We want to have clear-cut direction. And at this stage, we don't have clear-cut direction. So I will keep it small when I take these trades, but slight bearishness coming in here, telling me I could be on the shorter term on the intraday charts. I could be stock market bullish. So I've identified two levels here. The retracement back to the 50 and 61% level. That's market structure here. That's where I will take some longs, or then a decent break, a retest, and a candle reversal of this little flag pattern here. So I'm doing my level based here to get into this, but we'll see. If I get any of those two levels, I'll be comfortable, providing the dollar stays in the bottom 4 spots. I would prefer it moves into the red zone. Nasdaq, same scenario, just not a Fibonacci retracement. I don't find any levels at the 50-61% level, but nonetheless still a little wedge pattern, flag pattern, whatever you want to call it. It's a consolidation. So I would love to see a weak dollar and then a break and a retest and then some form of a candle reversal. Same setup on the Dow. And don't be stupid and take everything on the same levels or all three of them. Just remember they will do most likely the same thing. Now this one, the consolidation is a little bit skew and can't really read it with any lines. So yeah, I'm going to stick with just a retracement back to this level again. Or then, well, let's call it the 61% FIB trade zone here. That's what I'm after, providing the dollar stays in the red zone. That's what I'm after. So let's see. So to summarize the indices, we got the S&P 500, the consolidation, the break, the retest, or the retest of the FIB level. Nasdaq, just the breakout and the retest. And the Dow, just the retest of the fib level. You can see 3 potential setups coming in, and remember now, they will most likely do the same thing. In the pound CAD, you can see here, pound up there, CAD down there. I like this retracement of this last directional swing. Retest back to the support level at 61% fib. I will look for some long setups there. CAD Swiss, big swing down the page. I've marked that as the Fibonacci. Retracement back to the 50% level. And now I get the level I was talking about yesterday on the video. Yesterday I did a little bit there. It didn't get back up there. And then it tested this level, which I thought was the correct level. However, my strategy in the Fibonacci didn't show that, so I couldn't trade anything off there. If you did that, there was a very nice 1 hour double top, and the double top could give you some money, but it was not a setup I showed here. But now the retracement back to that level will reconfirm that level, and then I'll look for some shorts. US CAD. Dollar there, CAD there, getting a bit close to each other, but I'll definitely investigate this. By the time it gets down there, we could also see later today a potential consolidation, but it looks a little bit unlikely. That's why I haven't marked it so far. But a retest here on the dollar weakness against the CAD, providing the dollar stays stronger than the CAD, I'll look for some longs at this level. In the New Zealand US, New Zealand in the red zone, trend has just turned bearish, dollar still strong according to the New Zealand, so on a retracement back up there to that trade zone. That's the level I'm after, this last big swing here. You could just as well draw it in there, no problem there. I just picked up my level there. Between the 50 and 61%, that retracement, strong level. If it can get back up there, I'll look for some shorts. On the Euro US, just a consolidation breakout I'm after. Euro much stronger than the dollar. As long as there's pressure on the dollar, this could go up. So I'm looking at this little consolidation line here. If I can get a strong close above a retest and a candle reversal, I'll then consider some longs there. But at this stage, not for me. Pound US also consolidating there a little bit. I can draw in a triangle for you. Whatever pattern you want to see, I can draw it in there for you. But that's a consolidation, a big consolidation. Pound still very strong against the dollar. So if I can get a breakout, I will not trade in this mess. I don't want to trade inside here. I want to see that the bulls have tested breaking the level, prove themselves. Break a nice break up the page, a retest, and then a counter reversal. That could get us to step up the page again, providing we see a weak dollar. That means at the end of the day should break through all those levels that I'm talking about. New Zealand Swiss, big one, big swing down the page, obviously on the New Zealand. I want to be short here, but I want to short at these levels. So if it gets back up there to that retracement level, 50 to 61% level, market structure coming in there and there, nice and strong. If I can get a retracement back up there, that's only when I will get interested in this. Then the CAD yen, big down the page. I think yen, the Bank of Japan is now interfering again. Like every time for the last how many years, they would interfere, pushing the yen back up to the spot number 1, just to dribble down slowly but surely into the weakest spot. The yen is not something the market wants, but when the Bank of Japan interferes, that's when we start to see. But it's not something that can last. Because it's only their bank that wants it strong. The rest of the world wants it weak. So the bank can only interfere so many times, for so long. Then slowly but surely you see dribble down the page. I'll be cautiously long on yen on anything I do if I have to do this. It's just because of the history. But if it retraces back down there, I'll then look for some shorts on the CAD. The CAD, there's definitely, my focus is not the yen here really. The CAD is my focus. I want to be short CAD. Although the yen there, but my focus should stay on the CAD because I don't trust the strong yen. I just never trust the strong yen. Then the Aussie Swiss. Aussie Swiss, nicely Aussie there, Swiss there, getting a bit close to each other. But the Swiss and the yen is fighting up there. So the yen can turn weaker anytime, and then the Swiss will go up there. That's why I keep it on my list. Very nice. Last directional swing, top reversal, double top reversal. Retracement back to 61% right at market structure. I look for candle reversals there. and then I'll do some shorts. Then my favorite trade idea for today is a potential long on the Euro CAD. But first, if you are new to this channel and you find this video helpful, guys, you can support the channel by giving this video a thumbs up and hit that subscribe button for me so I can keep making content like this. And don't forget to turn on the notification bell to ensure you don't miss out on any of my videos. Now, on the Euro CAD, obviously why I like this Euro. All the sparkle for a couple of days now, very strong. CAD losing speed together with the dollar, but actually at a faster pace. So the CAD is really fighting here at the bottom for the worst spot, and the Euro the stronger. I want to be long here, and it's just a very, very strong trend. You can see how the bulls, they run up, they retrace, they break decent, retrace. A little bit of a small break, which was fine. Then the big run up, and now the retracement back to that level. That's what I'm after. So this is very close to the levels I'm looking at. I want to be long here, but I don't want to be long up there. I want to come back. I want to see that the bulls prove themselves by defending the support level, and it then bounce strongly. Then I'll take some longs later today. But guys, trading isn't just about my insights. I want to hear from you. Drop your questions, share your experiences, or tell me which trading opportunities you're eyeing in the comments below. And I've been trading since 2003. And if you are eager to take your trading skills to the next level, check out the link in the description to join my mentorship program. You can also support this channel by opening a trading account with a trusted broker from the link below, which I've been using since 2010. Thank you for joining me today on this trading journey. Don't forget to trade responsibly. I can't wait to see you in my next video. Until then, trade well.